Coinbase is warning of bearish trends in crypto. Its April monthly outlook for institutional investors noted that even with an increase in VC funding in the first quarter, funding levels are still down between 50 and 60% from the peak reached in the 2021 to 2022 cycle. That limits the onboarding of new capital into the ecosystem. You're in the crypto VC space, so I'm wondering if this is something you're experiencing firsthand. What are you seeing?
Yeah, what we're seeing is just a continuation of sort of the post 21 tech market bubble, as well as some of the issues that came out of crypto on the backside of that, FTX, et cetera. So it's really just an extension of a longer bear market that's been almost 4 years now, at least for the crypto space outside of Bitcoin. Bitcoin has found extreme product market fit with investors and continues to grow market share. The crypto index has kind of reached $2.8 trillion, up from about $2.3 trillion this time last year. But that $500 billion largely comes from Bitcoin gains. And I think, deal activity in 24 was up about 64% in terms of number of deals, while capital was up 30 something percent in terms of the amount of money. So on record, 2024 is still the third largest year of funding for the crypto space, and sort of maps to where we think the maturity is of an industry that outside of Bitcoin, Coinbase, and Ethereum is largely less than 10 years old.
That new Coinbase report also said all of the structural pressures stem from the uncertainty of the broader macro environment, where traditional risk assets have faced sustained headwinds from fiscal tightening and tariff policies. That contributes to the, quote, paralysis in investment decision making. Do you agree with that assessment? What do you think are the driving factors behind the slowing VC investments noted by Coinbase?
Yes, there's a number of factors that go into VC investment. And from my seat, you really have to look at the space over a very long time frame. Venture investors, typically who kind of come in and out of the market and try to time things, tend to miss some of the great companies and some of the great vintages that drive a lot of the returns. The average venture capital return is not great. And so if you want to beat the S&P, if you want to be the best, you really have to be looking for the best businesses whenever they are formed. Now, on specifically the amount of capital flowing into VC has been held up or hurt by a couple different things. One is less DPI from traditional Web2 venture players has flowed back to investors. So it's sort of put some pause and stress on their new allocations to privates. They like to recycle that capital as it's earned. They also like to see a mix of public and privates. So you get what's called the denominator effect. So right now, as public markets fall, your privates basket looks bigger and sort of forces less reinvestment. The third thing that's going on just presently, at least over the past month or so, is endowments, foundations, some pensions don't have a strong outlook on their grant funding. And that puts some pressure on their understanding of what their outflows to support the various initiatives might be for the next years. And that stresses, sort of preservation of capital, thinking about if there are good buying opportunities in the public markets, why do I need to take some of the illiquidity risk? And all those things combined, lead to some uncertainty in the VC funding landscape. But we've come down a lot. We're in a healthy place. And I think we're just part of that reset. Which is exactly why we're talking about it today.
The Coinbase report suggests crypto prices could find their floor this quarter. Do you see that happening? What do you think it will take to experience a rebound in both crypto prices and VC investments?
Yeah, this macro-driven downturn for crypto is flows, it's people's uncertainty, it's expectations, it's the credit markets, equities markets. Crypto remains a kind of fringe asset or a high-risk asset. Though Bitcoin is carving out a niche as a just alternative to everything else out there, right? When you either have to own one particular currency or you can own an alternative that puts some checks and balances in place for what other governments are doing, you can find some uncorrelation in the returns. But during difficult market period over a longer time, but during difficult market periods like today, correlation tends to go up. And we tend to see, crypto trade off. I would note that things have actually been pretty good in the crypto space. We are seeing, a bit more activity on the networks. We're seeing prices not go down and have high beta to, NASDAQ's retrace here. And I think the outlook is a bit uncertain, though. I can't say this quarter is when we bottom. Bottoming is usually a process, but we've been through 4 or 5 major corrections in the crypto markets over the past 10 years, and it does eventually stabilize and go back up.
According to PitchBook, AI is getting the majority of global venture dollars, with 58% invested in the first quarter going to AI and machine learning startups. Compare that to Q1 of last year, which saw just 28% of VC dollars channeled to AI startups. Are you seeing an uptick in interest in AI, and is that eating into crypto VC investments?
It's not eating into crypto VC investments, but it is another potential large technology wave. And what we look for in the venture space is what are some trends in technology that could define that decade or a number of decades. So, our bet is that crypto is one of those. AI, certainly poised to be another one. And we haven't really seen one since the major social, mobile social cloud, sort of transitions back, 10, 20 years ago. And we actually believe that AI, or that crypto, is a great counterweight to the centralizing forces of AI as it's being developed by a lot of the large, already mega tech companies. And there's a lot of room for democratization, decentralization, some checks and balances on how those folks are using data and verification. A lot of people don't know what these outputs mean. They don't know where they're coming from. And as we start to plug them into business processes downstream, I think blockchain rails are going to play a major role in that. So what we tend to see is actually in the Web3 space, looking at sentiment and mindshare narrative, about 30 to 40% of that within crypto is AI, in that sort of intersection of AI and crypto. So it's already the biggest subsector within Web3 that people are paying attention to and investing in. And we're one of the leaders in investing at that intersection of AI and Web3. When you look beyond that, it's other narratives in Web3 that have taken more front and center this year, which have been payments and things like meme coins and others, starting to trail off from their, peak hype, 6 to 12 months ago.
Sticking with PitchBook, the research firm forecasts that crypto VC funding will surpass $18 billion this year, nearly doubling the $9.9 billion annual average from the 2023 to 2024 cycle. PitchBook expects greater institutional engagement from firms like BlackRock and Goldman Sachs to deepen investor trust and spark more capital inflows. What's your take? Do you agree? Do you think at the current trajectory, crypto VC funding could surpass $18 billion this year?
That sounds a little higher than my expectations, just based on what I'm seeing from the LP universe. What I'm seeing is steadfast support, a lot of reinvestment from managers and allocators that have already spent time in the space. But I'm not seeing people moving too fast or having FOMO that haven't spent time in the space. And so I think that's going to be a process by which people need to come up the curve. They need to spend time understanding the industry, the technology, the fact that it is not a niche subsector, that Web3 investing is a generalist practice that covers all different subsectors. And we're moving on from that, speed and speculation phase of 2021 and into a fundamentals and, sort of durability and sustainability phase of what I'll call 24, 25 in terms of the types of businesses that we're looking for and the types of businesses that those LPs want to see and the real use cases they want to tangibly feel to get more excited about the space. So I think we continue to see, as I said last year, steady growth in the amount of VC investment, but I don't think there's a flood. And I think that's going to be very healthy because it keeps the competition amongst managers, very sustainable and in fact exciting. If we look forward and we say, it's going to be as big as we think it is, then it is not competitive, now from a, VC investment perspective. But we did see a little bit of an uptick in Q1 on what I'll call later stage deals. Binance raised $2 billion. Phantom Wallet raised a couple $100 million. So we could see a few more large deals kind of skew those numbers upwards. But at least by my data, I saw about 20 or 12 million go into the space in 24. And so I think it'll be somewhere between, 12 and 18.
What are you focused on right now? You mentioned some of the things, but what other areas of crypto are of interest from an investing standpoint?
Yeah, great question. We continue to be heavily focused on the infrastructure. It looks really messy to people outside the, crypto world. There's no kind of roadmap for how you put it all together, but it is starting to deliver some pretty exciting use cases. Obviously, in the stablecoin and payment space, we've seen a lot of activity. We see all the top financial institutions looking at ways to get involved in the both efficiency benefits as well as the structural market benefits 24/7, et cetera. We're looking at that intersection of Web3 and AI, as I noted. We're looking heavily at what we call middleware, which is sort of supporting application development. So a lot of key tooling is still missing to make it exciting for new developers to come in that don't understand the infrastructure to start building. And looking at the early days of social, very focused on what's going on in Telegram, sort of their neutral positioning as a large distribution platform used by over 1 billion people on a monthly basis, that is now introducing mini apps. And those mini apps can be, powered with crypto rails for payments, for transaction-based business models, for many things that, sort of large social applications tend to struggle with when they go mainstream.